Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site, we have Raju Daswani. He's the CEO of Fast Markets. And we're going to take a look at the new global commodity offering from Nasdaq. We just entered into Ferrous metals. Raju, it's great to have you with me for this launch. Before we get into that, tell us more about Fast Markets and what you do.
Thank you, Jill. Great to be here. So Fast Markets is a global price reporting agency. As a price reporting agency, what we do is we provide transparency in the commodity markets that we cover. And this is metals, steel, many of the industrial metals, as well as forest products, as pulp and paper. So we publish prices for these markets. In fact, we publish 5,500 prices, which cover a range of commodities. And the market then use these prices in order to transact business.
All right, now, can you tell us more about these new ferrous derivatives offerings?
Sure. So the Nasdaq launched 2 contracts over 2017 and 2018. The first one was a contract for shredded steel, or shredded scrap, which is a raw material that's used in the manufacture of steel, but it's a very important commodity because, of course, it is the obsolete scrap that's produced when products reach their end of life. And the biggest form of recycled scrap comes from the automobile market. So a huge amount of steel scrap coming out of that back into steel production, as well as construction scrap. That was launched in 2017. The second futures contract, or derivatives contract, was launched in 2018, and that was a contract for hot rolled coil steel. That is the largest steel product used across the globe, and especially here in North America, and heavily used in manufacturing, so in the manufacture of automobiles again, as well as in construction.
So in the late 70s and 80s, it wasn't tracked as much to the futures market as it is now. Why does the ferrous market need these kinds of contracts?
Right. I mean, I think that this goes back, and you look at the markets and how commodity markets have evolved over the last 20 years. And what you saw at the turn of the millennium was this, what we call the commodity super cycle. That was really driven by mass Chinese consumption of commodities and led to great increase in volatility in prices. Prices really escalated very steeply upwards. And what you've seen in the last 5 years, since the global financial crisis, as the Chinese economy has started to slow, and a lot of products that China were previously importing, they are now exporting. So many steel products, for example, are being exported, and that's had the reverse impact on steel prices globally. So this huge volatility in prices has led to uncertainty, especially for consumers, in how to manage that risk. And that's really led to the need for derivative products and hedging products to allow that to happen.
So tell us more about the contracts themselves. What's unique about them?
So, there are 2 contracts, as I said. On the shredded steel, what's unique about that is the only shredded steel contract available for this marketplace. And that's unique because, like I said, it is a huge market with a lot of tonnage going through industry in shredded steel and shredded scrap. And for the second contract, HRC, as I said, it is the biggest steel product. But what's unique about this particular contract, that it is a daily contract, which just means you have better tools and better ability to manage your risk through that contract that's been listed on the Nasdaq.
All right, so now this week you're in New York. There's a big steel conference going on. Tell us more about that. What are some of the key themes that you're going to be discussing?
Right. Well, actually, that's exactly why I'm here, and it's the 34th steel conference that we've run. It's a Steel Success Strategies event. It's being run at the New York Hilton just down the road, and some of the themes will be the impact of these trade talks. And we've seen a huge volatility in prices in the last couple of years. What you saw when Section 232 was announced, you saw escalation in prices across the board. In fact, prices in steel going up by over 50%. And then what's happened as some of these trade issues have been settled? We saw recently the agreements with Canada and Mexico, and they account for more than 50% of all steel imports into North America. We've seen prices decline by around 30% on HRC coil, as well as close to just over 20% on shredded scrap. These are the sort of themes they'll be talking about, what's happening in these markets, what's the outlook for these markets, and we have some of the world's greatest executives speaking at that conference today.
Okay, Raju, thank you so much for the insight. And thank you for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.